Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. Alongside me, my good friend Connie Hill. Us redheads will have you covered here today. So we welcome all of you, Debbie, Andrew, JP, Silas, Jay Richardson, BJ, and many others. Welcome to all. Now today we want to talk about kind of the follow through of the Oracle stock example from yesterday afternoon. Pretty amazing to watch that. We'll dive into kind of some of the sector analysis or the industry group analysis on that, to kind of see if any other stocks are moving and kind of talk about what caused that stock to pop as much as it did. Now, just real quick as we get started, you can follow myself and Connie on X. There's my handle. I will share that link with you in just a moment. We do post educational examples, and also when I'm not teaching, I post on X. And so follow me there, and Connie as well. Now, just real quick as we get started, remember the information is provided for general informational purposes only. Schwab does not recommend the use of technical analysis as a sole means of research. Other research like intermarket analysis, macro analysis, fundamental analysis is absolutely a part of an investing decision. A starting point tends to be technical analysis, but it doesn't have to be the end point. As you invest over time, broaden that funnel as far as your investing understanding, and that's what we try to cover here. Now, remember that with what we discussed, we'll do examples in the paper money software application for educational purposes. And also remember that there's risk with dividend paying stocks. We know those dividend paying stocks, they may reduce or stop paying dividends. That's up to the company's CEO, CFO to make that decision, maybe even the board as well. And also remember, when we talk about examples, investing in stocks involves risk, including loss of principal. Now, just real quick as we get started, I do want to take a quick look at the S&P and the NASDAQ. Then we'll talk about the Russell just briefly, and then the Dow, kind of see where that stands. Now, with that, we'll take a look at where the rates are, where the precious metals are, okay? And then we're going to slip just quickly down into the semiconductors, and we'll also start talking about Oracle. When we talk about Oracle, I want to kind of dive into the peer analysis, the competitors, and kind of look and see what's happening in that group and why did Oracle go up so much? It was the biggest pop I've seen in probably 25 years. So let's take a look at just real quick. I'm going to pull up just real quick the SPX on the chart. Now, I do not want to sound like a broken record, and we'll come to that chart in just a sec. But if we look, can anyone actually tell me probably what I'm going to say? What do you think I'm going to say? Now, I don't know how many times I've said this, but it's probably 20, I don't know, it's probably 20 times now, right? New high. How many of you would actually say it's never going to get old saying that? Okay. And now remember, if we kind of take a look at this, we dropped down initially, and the key word is initially. Remember when we talk about a gap down, the closing price becomes the resistance? Well, we actually went above it the very next day. So if you followed along in the kind of understanding gap downs, how they work, et cetera, how they reverse, it only took one day for that to reverse. So in the last, let's say 5 or 7 days or so, 5 or 6, we've just kind of been slowly reversing back up, not breaking any records, but kind of making like an ascending triangle over time. Now, this is not completely unusual on the daily chart that you see a shorter term snap down. But if you looked at the weekly chart, you could barely even see it, okay? And just because you break that shorter term line does not mean the trend is intermediate or longer term broken. Another lesson, okay, taught on that. So the S&P actually making a brand new high. We got to ask ourselves what sectors are leading that charge. If you look at the NASDAQ, now again, you're thinking, look, if the S&P 500 made a brand new high, what 3 sectors represent a high percentage of the S&P 500? What are they? That's a question. Now, if you look at, let's say, the NASDAQ, we do not see that it made a brand new high, but boy, it was close. But we've just kind of been carving. If you look at the last couple days here, kind of sitting on the 10-period moving average, someone bought this right at the 10-period moving average. That might have been one of our paper money friends out there. And you're going to see that yesterday someone bought right off the 10-period moving average. Someone's using it as support. And you're going to see that we went down to the 10-period moving average again. So these lines, again, playing out. And if you actually look at this, kind of a little pop and a little bit of fade, but still above the support level. Now, if we pull up just briefly and say, how's the Russell comparing to this? When you look at the Russell, kind of still just grinding in that upside channel. Now, if you looked at the, let's say the VIX, it's not even barely moving, it's sitting at 15. If you're a friend that likes to look at the Japanese yen, as we talked about months and months and months ago, it's not even moving, okay? So we do not have a lot of fear and a lot of domestic fear. We do not have a lot of international fear as a proxy of the Japanese yen, and just kind of just grinding to the upside. Now, if we go back to the 10-year yield, you take a look at this, this continues to push to the downside. And again, this might kind of make some areas in the market maybe perform a little bit better. We talked about that last week, okay? So we see rates falling, okay? Now, by the way, does rates falling, is that typically bullish or bearish for stocks? Bullish or bearish? Do stocks want higher rates or lower rates? Okay? Now, the other thing I want to kind of bring out just real quick when we look at the US dollar, that US dollar tippy-toed below that support level, didn't close there, but the US dollar kind of on its back as well. The reason why I bring this up is if that dollar is actually dropping, some investors might look for that correlation of, let's say, precious metals, commodities, things like that. We'll bring up one here today on that front, okay? Now, the one thing I do want to kind of say in terms of the Dow Jones, Dow is down 238 or about 0.5%. Probably some notable names to point out here just quickly is Apple. Apple had their day yesterday. Did anybody watch that? Kind of the point that was interesting was the AirPods, where you could actually have a conversation. The AirPods would translate or could translate different languages. That was pretty interesting. So technology kind of these days, I'd be interested to see how that plays out and how well does it really work in different dialects, not just languages. But if you look at this, this was kind of the buy the rumor, sell the news. It did go up to the target area before yesterday, and now it's kind of dropped back down. So some people kind of use those events as like an earnings, okay? The other one we actually see is AMZN here, and you're going to see that it also got pushed around a little bit today. They are also a cloud-based play as well, and I want to kind of talk about this stock going into our next example. Now, when we take a look at, let's say, Oracle for just a moment, this is one of the massive movement. I'm going to ask you a question, and if you don't know, and by the way, I don't know either, name a stock that is large cap that went up that much overnight that was not a buyout, okay, from another company. Now, don't worry, I don't know either. Okay. Now, what I want to do just real quick is I want to kind of take a look at, let's say, Oracle, and let's go to just real quick, analyze for a second. And so if we take a look at what they do, cloud software, okay? Now, if you're not really into technology, you might want to actually at least look at it because the technology of this cloud stuff, and we ain't talking about the clouds in weather, okay? The biggest actually thing is when you take a look at this, there's something seriously going on here. And so you're going to see that they're doing network capabilities, right? Digital assistants, machine learning, computers using algorithms to make decisions, right? Things like that. And when you actually pull this up, what you're going to see is, I don't think anything really stands out when we really take a look at, let's say, earnings per share. Well, revenue does, or sales per share, but the earnings per share, not so much. Now, if we pull it up, for example, who are the competitors in the space of Oracle? Now, when you get these big pops like this, it is interesting to kind of just double check and say, hey, which companies are in that space? Now, if we go to schwab.com, okay, now we're wondering, hey, let's say that Oracle, as I scroll down here, I'm going to get to its peers. And by the way, if you look at the numbers, okay, they missed there by a penny on the earnings per share, but it was the forecast. It was the forecast going forward that caught analysts, investors completely off guard. Now, when you scroll down and take a look at this just real quick, it's not just, you got CRM, you got Intuit, you got Adobe, and you got Synopsys. Now, I want you to imagine for just a second, okay, you got a pie, okay? And that pie represents the money in that industry group in terms of sales. Well, I'm not really sure if I'd say Intuit is in the same category as Oracle. Okay, probably not. But Salesforce, Adobe, Synopsys might be, right? Well, if Oracle announces all these potential future contracts, potential future revenue, their pie that was, for example, something like this, might have just even went even bigger. Now, if Synopsys came out with their earnings and actually said, look, we're going to pull back, we're going to be very cautious on, which they did, okay, all of a sudden, Oracle might be a bigger and bigger chunk of the pie of potential earnings in the industry group, meaning that they're a dominant business in that space. They're developing, they're outperforming their peers, and so on. And this is where a lot of people kind of want to find out, what are those 2 to 3 businesses that, for example, are dominating their industry group and or sector? When you look at CRM on the chart, it's a horror show, okay? It's tough. You look at Adobe, PG-13 material, right? Very tough. You look at Synopsys here today, very tough, okay? So Oracle just really, if we said these are the basket of 4 stocks compared to Oracle, Oracle really taking leadership here, okay? Now, if we take a look at this, I'll just pull up these charts just briefly so we can see this, okay? Now, if I pulled up Adobe for just a second, is Adobe bullish? Well, if we start at the top left and we land at the bottom right, that's not a bullish trend. We actually pull up a CRM and say, well, if we start over here and we're pretty much here, that looks at best sideways. Now, here's the deal. You're going to see the stock actually sold off. So, and the other one, SNPS, just real quick. Now, this is not an error on the chart. That's literally what happened. So with Synopsys announcing they're pulling back their guidance and Oracle saying we are upping it, whatever they are selling, other businesses are buying it, okay? And now here's the deal. It's a forecast, okay? But you're going to see that forecast can cause those stocks to go up or down. Now, we got to ask the question just real quick. Is that trend over? Do you think investors really buy that stock at $320 and just say it's over? The answer is probably not, okay? Now, I want to go to this trade tab for just a quick second. And if I were to pull this up, I cannot speak to this. Matter of fact, I'm not even going to look at this table outside what I already have. Now, some people like to buy stocks. Other people like to buy maybe derivatives of stocks. And that overnight movement, I can't see. It's pretty large, okay? I won't even go any further. But it's just interesting to notice because a lot of times you go through earnings, you expect volatility to contract, and the volatility didn't necessarily completely contract, okay? So just kind of something to keep an eye on there. Now, what I'm going to kind of show is in this example, let's say the investor said, look, I want to try to buy into some of that, thinking that it might kind of try to base and create a higher level of support. Now, what I'm going to do in this case is the investor does not have to buy their whole position at once. They don't have to. They could divvy it up. Now, we could say 50-50, half-half, right? We could say third, quarter, and so on. But let's say we just want to start building a position. And this is something that sometimes investors struggle with. They think every time they get in, they have to put in a full position size. Nobody ever said that, okay? Nice thing about having a zero-based commission on U.S. listed equities is that there's no commission, okay? Now, what I'm going to do is I'm going to right-click on the chart, and what I'm going to do is I'm going to pull this up. And this might shock some people because you're like, wait, you're buying it at a high. Well, wait, is buying at a high bad? I mean, if I take the opposite of what someone is saying there, if they said that, then buying at a low is good. Well, if buying at a high is bad, then buying at a low is good. And that investor might be buying Lulu, okay? So we're not going to go with that mentality. Or strategy. What we're going to do is we're going to start to build a position. Now, I'm just going to take a third capital size. I'm going to right click on the chart. I'm going to go to buy custom, and I'm going to go, let's say, in this case, what I'm going to do is going to go with OCO bracket. Now, this class is trading growth and value. Now, some investors might even take, let's say, that intraday wick, which is right at about $312. And what we're going to show in that case is we're going to take about $312-ish less 2%. Now, that's going to give us $305.70. Now, from where that is now, that's like $20 down, or about 6-ish% of the entry price. 305.76. Okay, 305.76, dated GTC. Now, if we pull this up, put an investor try to use that prior high as a potential target. For sure. The prior high, which could be today in this case, can be that what they call a swing back to that old high. Now, if we take a look at this, 345.72. Now, I want you to kind of think about how information is passed along, right? There's a lot of people this weekend that will say, hey, did you see the Oracle example? And then next week, someone will say, did you see Oracle? 2 weeks from now, someone's going to say, did you see Oracle? So just because we actually saw it in the afternoon, in the morning, and so on, doesn't mean that the average investor saw it or even paid attention to it. And that's why sometimes those trends, there's initial reaction, but the trend might be over, might be over yet, because other people haven't realized it or heard about it yet. Okay? Now, in this case, what we're going to do is going to go back to the position size. Typically, the capital size we're showing, and we talked about this yesterday, it's about 7,500. I'm going to take this to about 2,500. So about a third of a position. Now, if we do that, there it is. It's going to be seven shares. Now, if all of a sudden we start to kind of create some higher lows, then they add the other 2,500. Start to get a little bounce, add the other 2,500. I challenge you in the paper money account to start practice building positions. If you find yourself kind of struggling to get in initially, nobody said you had to buy the first position. What I mean by that is all at once, okay? Now, what I'm going to do is, over time, we're going to look and see if there's an add point, like a go hold, like a breakout, like a crossover, etc., and try to use those entry points as a way to add to the position. So trade number one here, we're going to go Oracle. Now, Synopsys struggled. Adobe is struggling. Salesforce is struggling. I can't really say Intuit is the same, okay? If these other companies continue to struggle and maybe even warn about their guidance going forward, that actually might even fan the flames for Oracle even more, that they're dominating the space and their competitors are behind them. Not just technically, but they don't have actually the same technology to offer to consumers that are buying it, okay? Now, are there any questions with that, okay? Now, what I'm going to do is, Fitness says Oracle believes there is no others doing their business. Well, okay, so I just read that, and that's kind of what I just said. When you look at an industry group, and by the way, when you look at the industry group, it's not always going to be that it's the competitors are perfect. If you wanted to see, and I'll have to fix that, if you wanted to see something where, hey, where could I see the competitors, maybe another viewpoint outside Schwab.com? Well, you could go to the fundamentals, okay? Now, if we go to where it says analyze and then fundamentals, what you're now going to notice is on this page, you will see other companies that actually give their viewpoint. Now, some of these actually will state from their point of view and also industry type of categorization of who is in their industry group / sector. That's very important because sometimes you want maybe another viewpoint, maybe getting a bigger list of stocks, not just 4, but maybe 10, okay? And I think when you look at the different competitors, looking at the scale of the business, size of revenue, market cap, liquidity, hugely important, okay? Now, just real quick, I also want to go back to real quick, when we look at the stocks, can anyone actually tell me what you see on this chart? What do you see? Now, I had a question. It was on NVIDIA on Monday, and we talked about it on Tuesday. When you look at, let's say, the semiconductor index, that got a little push. Now, a lot of times there's questions like, well, how do I find the stocks? I posted on X a quick video of using the heat map. I think, and this goes back to a lot of us are visual people. Fine, okay, let's use it. So if I said, look, I don't know about searching. I don't know anything, okay, about how do I find stocks, but I can go to the Market Watch. I can go to where it says visualize. And if I look at this, again, if we're talking about semiconductors, that's not in utilities. We know that. And if I pulled up the S&P 500 just right here, we now see, for example, here's the sectors. Do not forget that you can hit that drop down and it opens up this, it shows the sector listing. Now we know that semiconductors is not in utilities, it's not in real estate, it's not in materials. Lo and behold, it's there it is in information technology. Now, if someone said, well, I actually don't know stocks that are in the semiconductors. Well, if you click on the information technology, semiconductors and semiconductor equipment hits me right in the face, literally. And so all of a sudden, remember, the bigger the square, the bigger the market cap, okay? So that market cap, okay, you're literally talking, so if you had 1,000 million, okay, we're talking about $1 trillion, we're sitting here at $4.2 trillion market cap. So the bigger the square, the bigger the market cap. Market cap, just stock price currently, times the shares outstanding. When you look at another company like Avgo, or also known as Broadcom, that was a decent push here today. You're going to see the MU. So here's what's kind of funny is, historically, and I'm talking about like 10 years ago, 15 years ago, we would run a search. Now this is going to probably shock some of you guys, okay? But I'm just straight shooting. I think searching, how people talk about it, it's like old. A heat map and or scripting is the new methodology of searching, okay? You ask me, do I search? When's the last time that you ran a search? I'd probably say 10 years ago, okay? Because I think it's the old methodology. I think it's the long way to get to it, okay? If I ever run a search, it's because I go to scan and I'm actually just looking at a list of stocks by the industry, okay? Maybe with a couple, 2 or 3 filters, that's it, okay? But what you're now going to notice is the heat map and the scripting. To me, that is the new way and the faster way to search. And it can pull up a lot more criteria than just a couple that you put in the search, okay? Now, if you said, I'm not really sure what you're referencing, it's the scripts that we always talk about. So I do search, but just not maybe in the way that other investors are probably used to, okay? Now, if you take a look at this, I want to go to Avgo for just a moment, okay? Now, if I look at Avgo for just a second and say, what do we see in Avgo? We pull up Avgo just real quick. Here's what we see, okay? Now, I want to kind of pull up something just real quick. And there was a question that was asked by Jeffrey, okay? Now, Jeffrey kind of talked about, we always kind of talk about the 1, 2, 3 methodology, right? And here's what's kind of interesting about investing. You can make it as complicated or as difficult as you want. The question is, what information do you need to see to take a potential entry or consider an exit? I want to kind of show you where the entry was and where the exit was, okay? So if I said, for example, in this case, here's a number 1, there's a number 2, and if I wrote on this chart, and if I go forward there, if you said, James, I get on actually I'm going to show this either way because some of you might have different entries. If I said, James, I get in a number on day number 1, well, that's where the day was. That's when that 10-period moving average went green. The 20-period moving average went green right there. If you said, James, I am a number 2 person, I want both moving averages green. Well, there it was. And if you said, no, James, I actually don't get in until I actually get the 3rd nail, so to say, in that entry setup. Everyone's different. Okay, now, by the way, could you say, James, I like all of them. I just kind of invest in a 1/3 of the position here, a 1/3 of the position here, and I invest a 1/3 here. Could the investor do that? Yeah, they could. Okay. Or could they actually say, I get in half of the position on 2 and half of the position on 3? Sure. Okay. I mean, we all, let's think here, right? So those are some options. We know that actually number 1 is the most aggressive. But the thing I'm pointing at is if the investor gets in, where's the exit? Well, just a couple of days ago, as we went forward here, you're going to see that actually just the reverse of this. Now, this is not something new, but I just want to repeat this. If someone says, James, where is the potential exit on this? Well, the opposite, if someone says, I want to get out on the kind of the most earliest sign of exiting. Now, by the way, I'm going to write number 1 there. Does the investor have to wait until the end of the day? No. If they actually see intraday that 10-period moving average is red, that is the earliest sign of exiting. Problem with the earliest sign? Could be wrong, okay? I mean, it's the earliest sign, but it's the first sign, okay? Now, if we take it to actually where's number 2? Let's take the flip of this. So all of a sudden, we actually see number 1 right there. Number 2 was actually the crossover, and number 3 was right there, okay? So remember we kind of labeled this in this case 1, 2, 3, okay? Now I'm going to say that we take the middle entry. I don't want to be the first one through the door. I want to actually be the second one through the door. The investor says they got in there. And where's the exit? They got out, for example, here, okay? If they're selling on step 2. Now, some of those trades, some of them might have more profitability, some might be break evens, some are going to be losses. That's investing, that's trading, right? Now, if the investor says, well, I took that entry and it was slightly positive, maybe, well, that does not necessarily mean the trade is over. And so all of a sudden now the stock actually goes down and the investor is saying, well, when do I consider getting in again? Now, I would never, ever take those words out of Bill Barnhoff's mouth. And Bill Barnhoff has said for probably 10 to 15 years, rinse and repeat. Okay? Now, this is hard for some people to do, right? They do something once and they quit the next time. Well, what the investor is doing is they're saying, you know what, James, I'm going to go back to kind of that 1, 2, 3 again. Because we know in actually trading, you're trading patterns. You're trading a methodology, if you will. 1, and you're actually going to see that 2 and 3 are pretty much on the same day. Now, if you said, James, I get in number 2, well, that was probably right there. Now, remember, could that be intraday? Yes, it could. Could it be at the close of the day? Yes, it could. Okay? And so what you're now going to notice is, now remember what I said yesterday is, could you be looking at these charts? Sure. Could you look at them on a list? And could you look at the whole moving average column that we showed yesterday? Could you see which ones were actually fresh green moving averages? Yeah, that's the point of the script. That, by the way, the script column, it is a search. Do you realize that? So if I went to, let's say, the Market Watch, and I went to the quotes, and I actually said in this case, hey, I want to look at, let's say, this is what I kind of say, searching is like old. It's almost like playing a cassette or a CD. If we said, what is the new way to search? Okay, when you look at the 10HC, it's going to tell us the color of the moving average. Obviously, these, that, and that, those are the ones where the moving average is green. Script's not guaranteed for accuracy or timing, but could be helpful. And the number in the box represents the number of days the moving average has been green or red. If we said which one is actually where the moving averages, both of them are green, and there's a crossover, well, it's kitty cat, okay? Now, I want to get to its twin cousin, CMI, here in just a second, but it's not that hard to find. So what you need to actually understand here is that when you look at each one of these columns, what I got tired of is running a search and running a search and running a search, and I felt like you were just professional searcher. Okay? Well, why don't you just put the search, I'd run a search for a brand new high. I'd run a search for a hold. I'd run a search for relative strength. I'd run a search for trend. Look, forget running searches. Just put them on the column heading and actually make this your dashboard. That's why we call it the trading dashboard, okay? Now, if you want to be a professional searcher, go for it. If you said, I'd rather do other things with my time, use the trading dashboard that we talk about daily. But there's been some questions on that. Someone said to me, it doesn't seem like you search very much. I don't search like the way that we think about 10 to 15 years ago, okay? And I haven't done a search for probably 10 or 15 years. Usually the only time I do a search is when someone asks me to do a search. This is the search, okay? Now, if we take a look at this, I want to go back to just real quick the Avgo. And if we, I'm trying to give enough information without like someone's like, oh my gosh, I love searching. And we like searching different ways, but you're just kind of doing the CD method. I'm kind of doing it with maybe like the iMusic, if you will, or the music app, and I don't have to have the cassette or CD, okay? So the technology has changed over time, in other words, okay? Now, what I'm gonna do in this case is, on the example of Avgo, we know that when these stocks have pretty big pops like this, now this is a pretty classic example where we had the gap to the upside, right? Green candle, and then we actually get a red candle. Now, we could actually say that in the shorter term, that we really have in this case, okay, that the maybe a little shorter term, little double bottom, if you will, at 335. Now, in these large green candles, if we said what is the most recent red candle, well, it's going to be September 9th. Now, why is there a green dot on the chart? There's a green dot on the chart because today we're trading above the high of that lowest, most recent red candle. Now, a lot of people, I call it the boogeyman candle, okay? Okay, the candle's so huge it scares people. Compared to what? I mean, compared to what, okay? Now, we know that when we actually have these large candles, we know that the midsection could potentially, perhaps, maybe, become that support area. So we're gonna do this in two ways. Number one is we're gonna buy some shares here, okay? And what I'm going to do is go to this OCO. For time's sake, I'm going to right click on this, go to buy custom with stop. Now, what I'm going to do is I'm going to go back to kind of what we've been talking about, a half position. Why? Well, we're going to try to buy half the position here. That's a limit order. A limit order is just stating that's the max of what the investor is willing to pay. Second, we're going to use really this open price of today's candle. These gaps where we gap up to, the open sometimes can act as a potential support as well. If you go lower than where we gapped up to, that's not necessarily a great sign. It's actually saying that that gap up is failing and is likely to drop down further. So some investors, if we're talking about trading, they're going to set that stop underneath that gap open price. 352.07, less 2%, 345.02. Now, what I'm going to do for time's sake, stop date GTC. So this is saying first buy the shares at the current price or less, that limit order, okay? And there's the stop. Now, what I want to do in this case, I want to point out, we're also going to set an alert. Where's the alert? Where do you think we're going to set the alert? I'm going to have to fix those orders. Where do you think we're going to set the alert? Now, an alert is not an order. Alert is just like an alarm clock, okay? I'm going to right click right at the middle of that candle, and if we intraday go down to that, perhaps we're going to say, look, let us know about this. This could be a potential bounce setup, entry number 2, question mark, okay? And we're going to say, look, if we get at or below that, now what's the price? Right at the midsection, okay? Look, use the alerts. If you're saying I'd like to get in at certain areas, there's some opportunity, right? Put the alert there so you don't forget. Now what I'm going to do is go ahead and create that alert, and it's sitting right here. The stock price, mark, needs to be at or below that level. If it is, it alerts. Now, I want to also go back to just a couple stocks that are kind of standing out a little bit, okay? Now, number one, if we take a look at a couple stocks, we see GS, we talked about that yesterday, got actually a little shorter term, brand new higher high. Don't have anything to say on that besides another little push. Its twin cousin, trying to, which is kind of trying to be the little engine that could, is, well, trying to squeeze out of that ascending triangle, had an intraday high, but some of those traders out there took a little profit and got scared, okay? Now, if you take a look at this, does that mean the breakout failed? No, it just intraday couldn't hold there, okay? Are we still above support? The answer is still yes, but could Goldman Sachs drag that one up? Notice also JPM is also there as well. JPM getting a little push. If you actually take a look at us, also MS, you're going to see that actually got a little push. So some of these financials still getting a little trend to the upside. Now the ones I kind of want to turn to for just a moment is little Palantir. Now, if I ask you just real quick, where was, past tense perhaps, the resistance on Palantir? Where was the resistance on Palantir? Now, one of the questions we hear a lot is, well, where was the entry? Well, when we talk about entries, we're talking about bounces, also known as holds or to hold if it's intraday. And the second, well, let's say we get a potential entry for most investors, is a breakout. Now, the breakout could be a horizontal or could it be a diagonal line? So to answer the question, where's the potential entry? We got to say, was there a bounce? Second, was there a breakout? Well, if I actually look at this chart and say, where was a recent Gehol dot, I wouldn't have to be completely bright to say the recent Gehol dot was right there. If all I taught someone was Gehol dot, ding, 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 don't know what that means, but that was the most recent Gehol dot, okay? Now, if we went back to resistance on this chart, well, if I took a ruler and I said, if I took a ruler and kind of said, where did I kind of get a number of these tops recently? Well, it's kind of right around 160-ish or so. Many times we went up to that and then faded back down. Today, pokey to the upside, and what you're now going to notice is trying to get a little breakout. Now, we define breakout as the body of the candle above the resistance. That meets criteria number one. Step two, want the what? The closing price above the open. Why does that even matter? Well, because if someone's talking about a breakout, they want the color of the candle to be what? And the answer is green. Okay, now, let's make an assumption here that Palantir closes higher, okay? Now, the market here is going to close here in about 23 minutes, so I can't stay to the very end, okay? Now, what I'm going to do is I'm going to right-click on this chart, buy custom, and I'm going to go with OCO bracket. Now, by the way, when you look at Palantir, speaking of a company that also does a lot of contracts as well, you're going to see that they do something. If we take a look at this, they do operating systems. They deliver software and updates across businesses, deploy their software virtually, right? Artificial intelligence platforms, unified access to open source, and you're going to see that this is the second time we've kind of heard of these language models or machine learning. Now, if we take a look at this, we kind of scroll down, really about the last 2 years, they turned profitable. If you actually look at the sales per share, or revenue, in other words, divided by the shares outstanding, the highest they've actually been. They have not been super fundamentally successful. This is not unusual. You get companies that are up and coming, they have invested a lot of money in their businesses, and they're actually investing and burning a lot more cash than they're maybe even bringing in. That's why those contracts are very important. Now, what I'm going to do is on this is I'm going to put a target right back at that prior high. I'm going to go about 189-ish dated GTC. I'm also going to set a stop underneath the moving average. Why? We don't know that 160's support was resistance. I don't know if it's support yet. Now, what I'm going to do is I'm going to take 158.85 If I take 158.85 less 2%, it's going to be 155.67. 155.67. There it is. Now, what I'm going to also do is I'm just going to go dated GTC. These need to be the same time in force, also known as TIF. Now, the comment really kind of came in. So I used to teach searching. I probably taught searching for 10 years, okay? I've seen hundreds of searches, okay? I've seen searches where people thought they were really good searches. And as I tested them and taught that class for probably 10 years, some of them weren't that good searches, okay? Really, the scripts that are on this page, if someone said, hey, from 10 years of teaching a class on searching, using a new methodology, not just kind of running a, like the word historically was search. Let's just say that if I said script is the new search word, script or search code, okay? These ones really stand out to me to be significant, okay? That you would say if you were searching, scripting for anything, these would be paramount to actually have in the arsenal, okay? Now, some of these you might say, James, I don't look for relative strength. I like to buy weakness. I feel sorry for that investor if they said that. Maybe they don't completely understand, but I have to respect what they said. Maybe they don't like relative strength, okay? A little fun there. Now, some other investor might say, James, I don't like brand new highs. Okay, so we have some differences there, okay? New highs, a higher high tends to also have a potential higher low. You get a higher high and a higher low, that means it's trending. If you don't like highs, do you like uptrends? Okay, so these are the things that I've learned over time that I would say are significant. My gosh, if someone started with these, okay, some of us had to, crawl on broken glass and do push-ups and lemon juice just to kind of come to this point. And the thing is, it's not just a tool. It's actually having the time and using it to see, is it relevant and does it actually have some significance over some of these others? They say it's important, but they don't have the time that have actually proven it from history of practicing it. And that's kind of, as we've had that practice, that's why we kind of put those on there. Now, the biggest actually thing is when I go back to this, I'm going to go back to this number, and I'm just going to leave it right here. But the other stock I want to kind of pull up for just a second, I'll move this order down. The other one we're going to kind of keep an eye on is Dash. Dash has also been another one where it's kind of had a little crossover. It looks very similar to Palantir. Now, I don't want you to think that this is the first time we talk about Palantir and Dash, because it's not. What you're now going to notice, Palantir and Dash, when you look at Dash, something that's been a little unusual as we got above the area of resistance, kind of see this intraday shadow right there. And we see the intraday shadow right down near that area of the 10-period moving average. And so if you look at this, it's like Dash is someone's buying on those intraday dips because they actually think that 250 is just potential support perhaps. And then buying on the intraday dip again on the upward trending moving average. I think if we had a little bit more time, Dash is another one that maybe an investor might kind of keep an eye on. Now, the significance of Dash, when we talk about DoorDash, now if you go into a restaurant, it doesn't matter if it's like Chick-fil-A, Burger King, McDonald's, whatever it is, or a sit-down restaurant. I think people are probably really underestimating a business like this that is very similar to like Uber Eats. And if you actually kind of look at the numbers of the business, they turned profitable really in the last year. And so this is kind of one to kind of keep an eye on again. Now, I'm going to make this fast. When you look at NEM, okay, some of you are probably watching this. If you look at NEM and you compare it to its peers, it's kind of interesting to note that NEM is in the top two as far as net profit margin. So not only is NEM actually trending technically stronger, but some of the fundamentals are actually the strongest, probably the top 1, 2, or 3 stocks in the neighborhood if we're talking about fundamentals. Now, does that guarantee that stocks can go up? No. My point in saying that It looks like some people are actually buying something currently strong technically and something that has shown a history of strong fundamentals. Okay. Okay, so I just want to kind of wrap up. We said the last two stocks we're going to keep an eye on are really UNH and Netflix. So I'm out of my time here today. I want to thank Connie for answering those questions in chat. Stay tuned for Michael Fairborn coming up next. I want you to go out and practice in looking for some of these stocks on a technical point of view with some fundamentals as well. I want you to really compare and contrast the stock that you're looking at compared to its peers. Okay. Now, with what we discussed, it was done for example and illustrative purposes only. And stay tuned for Michael Fairborn coming up next. Make sure that you subscribe so you can see all of our content. Thanks so much. Take care. Bye-bye.